At 9:17 a.m., your card works. At 9:18 a.m., it doesn't. Same store, same balance, same you. The cashier looks confused. You feel embarrassed. You try again. Declined. In that 1 minute, nothing happened in your life, but something happened inside the financial system. An invisible button was pressed, and your money stopped moving. Not because you were broke, not because the bank collapsed, not because a hacker drained your account, but because a machine somewhere decided you became risky. And once that happens, your money is no longer fully yours. This sounds dramatic. It isn't. This happens quietly to millions of people every year, and almost nobody understands how it actually works. Because we're taught a comforting story. You earn money, you deposit it in a bank, the bank keeps it safe. You can use it any time. That story is simple. And it's wrong. What you really have is not a vault with your name on it. You have permission. And permission can be paused. Right now, more money is moving digitally than at any time in history. Cards, apps, transfers, subscriptions, auto payments. Your life runs on invisible rails. Which means the most important part of modern money is not cash. It's clearance. Your money only exists in motion if the system allows it to move. And there is a control layer above your balance that most people never see. Think of it like this. Your bank account is not a box of money. It's a traffic lane. And the invisible button controls the traffic lights. Green means flow, red means freeze. Your balance can say $5,000. But if the light turns red, that number becomes decorative. So who controls the light? Not just your bank. There are 3 layers. First, your bank's own risk system. Second, the card networks and payment rails. Third, government and compliance systems. Each layer can stop your money, and they don't need your permission. Let's start with your bank. Every transaction you make is scored in real time, not reviewed by a human, scored by software. It watches patterns, location, device, time, amount, merchant type, your past behavior. If your pattern suddenly changes, the system doesn't think, maybe they're traveling. It thinks, probability of fraud increased. Banks don't manage truth. They manage risk. And their math is brutal. If 1 in 1,000 suspicious transactions is fraud, they still block all 1,000. Because letting one criminal through is more expensive than annoying 999 innocent people. So when your card is declined, it's not a judgment. It's a statistical reflex. The system would rather be wrong than be late. Now here's the uncomfortable part. Once your risk score crosses a line, the system doesn't just block one payment. It can downgrade your entire account. Behind the scenes, accounts are placed into internal categories. Normal, monitored, restricted. Restricted means your money technically exists, but practically, it's trapped. Transfers delayed, limits reduced, extra verification added. Your money becomes slow. And in modern life, slow money is almost the same as no money. But your bank is only the first gate. Even if your bank approves you, your payment still travels through networks. Visa, MasterCard, ACH, SWIFT. These are not pipes, they are checkpoints. Each network runs its own surveillance. Their job is not to serve you, their job is to protect the system. So your payment is constantly being rejudged as it moves. Imagine being searched at every airport connection. You passed the first security check. That doesn't mean you'll pass the next. Now add the third layer, compliance systems, anti-money laundering rules, know your customer laws, sanctions lists. These are not about your personal guilt. They are about institutional fear. Banks face billion-dollar fines if money flows where regulators don't like. So banks are incentivized to overblock. If something even resembles a problem, they freeze first and ask questions later, which is why people sometimes lose access to money with no warning. Not criminals, regular people, freelancers, travelers, small business owners. Someone sends a large transfer, a new client pays from overseas, a crypto exchange is involved, a name matches a list by accident. Click, red light. And now comes the part nobody tells you. Freezing money is easy. Unfreezing it is slow. Because freezes are automated. Reviews are manual. A computer can stop you in 1 second. A human might take 3 weeks to reverse it. During that time, your rent doesn't pause. Your bills don't pause. Your life doesn't pause. Your money does. This is why the phrase, "I have money in the bank," is misleading. What you really have is conditional access to money. As long as you remain inside acceptable behavior boundaries defined by algorithms and regulators. And those boundaries are not written for you to read. They are written for institutions to protect themselves. Now, zoom out. Why does the system work this way? Because modern finance is built on speed. Trillions of dollars move every day. At that scale, you cannot rely on trust. You rely on filters. And filters must be aggressive. If they were gentle, crime would win. So the system is designed to occasionally hurt innocent people. Quietly. Statistically. Acceptably. From the system's point of view. There's a strange irony here. We think digital money gives us control. In reality, it gives the system control. Cash is ownership. Digital money is access. And access can be revoked, not permanently in most cases, but long enough to cause damage. This is not a conspiracy. It's a design trade-off. We chose convenience over autonomy. Instant payments require constant monitoring. Constant monitoring requires instant blocking. And instant blocking means mistakes are inevitable. So the invisible button exists because the system cannot afford to hesitate. The more digital your life becomes, the more power that button gains. Which leads to an uncomfortable question. If your money only moves when machines allow it to, who truly controls it? You? Or the system that decides when the light turns red?